Done. So I'm live on LinkedIn, I'm live on YouTube. I've sent people the WhatsApp, a lot of people on WhatsApp. So if you can hear me, I see some people on YouTube have already joined in and LinkedIn as well. Good morning, people. Let's begin. Give me a cheer or something if you can hear me, and then we will begin. Can you hear me? Is anybody there? Can anybody give me a cheer or something? Let me check my audio on LinkedIn. Done. Yeah, I guess LinkedIn is sorted. And YouTube, I'll check. And YouTube, yeah, YouTube is okay. Let me begin then. The show that we deserve. The show that we deserve. We deserve it. Yes, we do. We cannot take a break. It's so good. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We are having such a good time, and this is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things could get any better, like they couldn't possibly get any better, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, you gotta follow a tradition, right? You know the tradition. The sweet and sacred tradition of the simultaneous sip. All we'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug or flask or a vessel of any kind. Pour it with your favorite liquid. I like water, with some black pepper in it. And here we go. Oh my god. Beautiful. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we are in this together. That's such a beautiful thing to say. Let's begin. Mr. Tiwari has a comment. Hi, what happens on the days when there's no print of newspapers like 15th August? I remember the show was live on that day too. Newspapers came on that day as well. And then I just don't read from the newspapers. E.T., Mint, and all of these people, they are the staple. But that's not the only source. I also scroll through Twitter, some important handles. Then I also read N-Tracker and all of these online publications. So I corroborate all that information and then we have it. But newspapers came on 15th August as well, by the way, this time. So let's begin, right? Yesterday, the market fell. You saw that? You saw the market falling yesterday? The stock market went a little low last night, right? 1%. But did you check Ether stock? Did you check that? It was like 6-7% up, right? 6-7% up. So when everybody loses money, you can still gain money if you can look into the future. right? And that's what we do here. We look into the future. And what did I tell you about Aether? Uh, I remember when I told you about Aether like a couple of weeks ago. It's been 3 weeks probably. Time flies. But at that time, the price of Aether stock was about 320, 325, 330, something of that sort, right? 320, I guess. Right now, the stock is at somewhere around 410, right? And I told you that when the news came out that Ather and Ola are selling almost the same number of bikes, Ather was still valued at 1.2 billion when Ola was still valued at 2 billion. So ideally what happens is when the number of bikes getting shipped are equal, become equal, the valuations are also supposed to be equal. In fact, the valuations are supposed to flip. Suddenly, Ola needs to be valued less because it's selling less number of bikes. The prospects start dimming, and Ather needs to be valued more because its number of sales are rising up. So, $1.2 billion at Ather, $2 billion of market cap of Ola, and I said that the valuations are gonna flip. That means there was almost an 80% possible upside for Ather, right? Now, out of that 80% possible upside, how much has been captured already? So, if it was valued at 1.2 billion at 330, right now the stock is at 410, which means that the stock has essentially gained 25-30%, right? 25-30% of 80% is already in. So, you can see the stock going up like 50% more, right? And that's when it's going to come out with its earning. It's probably going to reach profitability. So Ether could be valued at 2 billion to 2.2, 2.3 billion, right? Which is where its stock will be about 500, 550, something of that sort. And that's when Ether will have priced in its potential. And then the future, whatever happens, happens. But that's when you'd know that you've priced in Ether as a company, right? It was undervalued. It is still undervalued. I told you we discussed it in depth. And when the markets fell, uh, you know, we had a good news to talk about. How does that sound, guys? Isn't that good for a good morning, right? That's a pretty good morning. What do you think? Which is not what is not a good morning. This I specifically said for you, Mr. Tiwari, because you are like, hey Nishan, don't start with the bad news, please, man. That's what you told me once. And don't begin with the bad news, right? But it is good news. The bad news is, which eventually comes, it has to come from somewhere. The 50% tariff, right? It was supposed to go on from Wednesday, and right, it's basically shaking a lot of people. So today is Ganesh Chaturthi. Uh, Ganesh Chaturthi is when the markets are closed, but people are scared. So a lot of those revisions have started happening as far as Indian, you know, valuations are considered, Indian markets are considered, Indian GDP targets are considered. People who were saying that US exports of $80 billion are essentially 0.2% of the entire play, right? Is it 0.2%? How much is $80 billion of a $4.2 trillion economy? So 40 billion would be somewhere around 4.2, 400 billion is 10%, 40 billion is 1%, right? 40 billion is 1%, so $80 billion is 2%. So 2% of the Indian GDP. Am I right? Yeah, 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 I am. So 2% of Indian GDP gets affected. Uh, Definitely good news, says Mr. Tiwari. So people are saying that Indian GDP could have a shortfall or the target revision, a downward revision of about 0.8 to 1%. So what Indian GDP wanted to do as far as like going up from 6.5%, people are saying that it might just come down to 5.8% to 6%. if the tariffs do not go away, right? Even though right now, from the 80 billion, from the 90 billion that we send to US, 40 billion are tariffed. 40 billion are not. So pharma and electronics are still not tariffed. However, the 40 billion that get affected, are going to get affected, are the ones with a lot of labor involvement in them, right? So there's textile, there's shrimp, there's a lot of gem and jewelry exports. All of those exports are very heavy on employment. They constitute a lot of the bottom of the pyramid hirings, and if they falter, it's gonna be a big bit of a hassle, right? Now the situation is, what do you do? So the government is trying its best to actually navigate through the crisis. What did the government do? First of all, the government started advising these companies on deleveraging from the US market, diversifying from the US markets. The government actively started looking at all markets, including African, to sort of, you know, offset the fall. Essentially, when you're looking at $40 billion, right, and then you look at a country which is taking $1 billion, and if you can just arrange it in a way that it could, instead of a billion, it could take a billion point two, right? So that is how they started trying to, let's say, make up for the shortfall which is gonna come, right? Now, what's the other way? Is that the companies start uh, deleveraging from India. So instead of having their manufacturing setups in India, they start going abroad and they start setting up their units in Dubai and a lot of these West Asian countries, right? That was number two. Number three was essentially giving them some sort of a credit guarantee scheme, some sort of incentive, some sort of subsidies, basically making up for the tariff, right? Independently. That was number three. Number four was getting the economy rolling. Getting the How do you get the economy rolling? By boosting the domestic consumption. How do you boost the domestic consumption? You take the taxes away, you reduce the taxes, which is what GST rationalization did, right? When they said that 12% GST goes away, 99% of what was getting GST of 12% goes to the 5% slab, right? And then income tax goes away, and then, so that was number four. And number five is just, talk to US if it's possible. So the government is trying its best in all directions, of course, as it should, as it needs to be doing. Unfortunately, what's happening is that a lot of these things affect what's gonna happen as far as the investments that were coming to India are considered, right? Now, the auto component manufacturing companies, which were looking at, you know, manufacturing in India and sending things to US, they're gonna reconsider their plans. They're gonna reconsider their plans. Now they have to reconsider their plans because it's not competitive anymore. It's not that profitable to make in India anymore, right? If the idea is to export. Now that is a very bad news. Why? It's a bad news in two ways. First of all, it's just bad if you can't invest, or if you're not attractive as an investment anymore. But it's bad in a way because we just slept on the wheel for the last 40 years, right? We didn't do shit. The country didn't do shit as far as the whole manufacturing paradigm is considered. What we did was we just counted the money that was coming in through, uh, you know, IT services, through BPOs, and so on and so forth. We didn't invest in manufacturing at all, which is biting us now, right? Which is biting us because, let's say, a 1.6 lakh crores are being invested in semiconductor manufacturing now, right? 10 units have been set up in the country, 10 units are being set up in the country. Smartphone manufacturing started in 2017, right? Everything else is just basically non-existent, right? In fact, even the semiconductor plan was getting derailed, and people were saying that it's not a good idea to make those semiconductors in India. like people like Raghuram Rajan, right? Now, those people and everything that happened in that direction essentially just derailed the country, right? And there's only so much you can do so quickly. That is the problem. So, Indian markets bear the burden of US levy, toil of Indians makes output Swadeshi, auto electronics dealers pull plug on festive stock. So, okay, now uh, two things are happening while this is happening. The Indian consumption story is starting to look good, right? Because of whatever is happening, Indian consumption story is starting to look good now. While FPIs are essentially moving away, are taking their cash away, because a lot of other markets are pretty attractive. What's happening is that IPO money is still pouring in, right? IPO money is not going anywhere. Foreign funds, uh, collective investments rise 26,000 crores in FY25 from a year earlier, right? So in FY24, the number was 8,500, and now it's 26,000 crores essentially. And also, uh, because of these investments, uh, people are starting to think that the economy can hold up, because there's a lot of moves as far as the whole domestic consumption. So, one line, you have investors going away from India as far as the FDI market is considered, which is one part of the equation. On the flip side, you have FPIs investing in IPOs of the country. So, that is an interesting conundrum which is happening. So, this is what's going on. A lot of action, a lot of very interesting times. Today the market is closed. Thursday is the Nifty expiry. Thursday, you're gonna see a dip, and then it's gonna be very interesting on how things turn out. Very interesting, right? Speaking of the tariffs, the idea of tariffs, why they were laid on in the first place, was to arm twist Russia, to essentially get Russia to fold and stop the war. That doesn't seem to be happening at all, right? So, what you're essentially looking at is just India getting screwed for no reason. Or let's say, if Russia had stopped the war, uh, maybe these tariffs would have been reversed. And if that would have happened, India would have been back to the bright spot. But unfortunately, that doesn't seem to be happening. Also, the US is essentially going away from the China plus one play. So the US is saying that we don't need China plus one as far as deleveraging ourselves is considered. We need to make things in America, right? This was supposed to be a two-step plan, that for the first 4 years, China plus one, and then you get some manufacturing in US. But now they're saying, like, just start making uh, pharma in US ASAP, right? Start making steel in US ASAP. Start making these things in US ASAP, because US realized that essentially 90% of its APIs are coming from China, and 70 to 80% of its generic drugs, like the final product, is coming from India, and they don't want that kind of dependency anymore, right? So that's very weird. Not great news for the country. Speaking of something else, the auto electronics dealers are still very cautious. So while there's a lot of noise, or let's say a lot of excitement for the Indian consumption story, people are saying that Indian consumption story has a real chance of really breaking out in a lot of ways. They are saying that don't stock up like crazy. Be very careful with the stocks. Stocks, I mean the inventory of phones, of cars, and so on and so forth. They say that there's a lot of unsold inventory right now, and if you're gonna stock it up, you don't know what's gonna happen. So there's a very cautious optimism as far as this play is considered. Inventory cuts, dealers go slow on purchases. Mahindra and Mahindra advises against high cess models, offers push stock. AC billing down, of course, dishwashers, TVs trimmed, and that's what's happening as far as the whole is considered. Also, at this very hour, the government is talking about uh, making companies not profiteer from the GST move. So the idea behind GST rationalization is to what? Is to boost the consumption, right? They want people to buy things. That's why they made it cheaper. That's why the government said that, hey, we were making 12% of all purchases. We are willing to make 5%. We just want people to start buying, right? We just want people to start consuming, right? But what is the natural instinct of a business in this case, right? It just takes the less GST and keeps the product price there, right? So the margins get better. That's the natural instinct of a business, right? Now the government is saying that if you try to profit here, we're gonna screw you up. So don't do that. Don't do that. Is the play. Uh, you know, we So the government is trying to stop the profiteering as far as the whole play is considered. Moving on. Speaking of the markets, right? The whole tariff situation has also led to a rise in bond markets, bond prices. Now, bond prices, the sovereign bond prices, why do they rise and fall? Most people don't realize why sovereign bonds rise and fall, right? Bonds are a proxy of how much the government can pay back and how easily it can pay back. What's the stability of the government's physical fiscal situation? I was saying physical, fiscal situation, right? How strong is that? When the GST rollout happened, and it seemed like the government is going to lose a lot of money as far as these transactions are considered, the government, the bond started rising up, right? The government bond yield started rising up. Now, the government bond yield started rising up uh, because the market feels that it's going to be difficult for the government to essentially, maintain its fiscal strength as far as the whole tariff situation is considered, as far as the newfound losses are considered from the GST rationalization, and so on and so forth. And when bond prices rise, investors want to buy them because they offer better interest rate, right? So investors are like, yeah, we can buy this. So that's what's happening. Bond prices have risen up a little. The rising bond yields have widened the gap between sovereign bond and state bonds and bank fixed deposit rates, making the former an attractive entry point for long-term investors. So they become better than FDs. Now FDs also need to go down a little to preserve the net interest margin play. We've discussed that, right? Because when you get a lot of FDs, there's going to be surplus liquidity at the bank, which is going to be a bit of a problem, right? With limited credit offtake, which is also very very important. So we discussed this, viewers of Thinkers Frequency. A comment on LinkedIn just landed here. Interested to contribute to this project. Let me know when we can speak. Oh no, sorry, Mr. Willis Desai. This is a monologue, so you can drop your comments and we can make discussions. But it's not a conversation that way where more people speak. You know, a lot of research happens. It's a live broadcast. Moving on. HALGE deal for LCA MKA1 likely by next month. This is essentially the engine deal with HAL. The MCA is LCA is the light combat aircraft, indigenous light combat aircraft. The jet engine, $1 billion deal. HAL is readying that deal. Good morning, Mr. Patil. Good morning. Better late than never. So you dropped an intelligent comment, by the way. We'll talk about that in the consumption story last night. So HAL, now why is HAL and Indian government essentially still dealing with General Electric, right? Wouldn't it make sense for the Indian government to essentially block these particular deals or not ready them at all as a bargaining chip? Because $1 billion here and there, or maybe it's a way of negotiating, right? That hey, we are taking this deal on, we are not cutting it, so you might like to reconsider your tariffs and stuff. However, this is a problem because India is still buying a lot of US supplies. India was looking at reconsidering the Boeing airplane order, but there's no news on that yet. India is still in touch with US on the penalty tariffs, so that's what's happening. Still, you know, a very complicated equation. Indian defense going up. Indian defense minister takes F-35 dig at US from INS platform. He said, "You made an F-35, the flying F-39, 35. We made a floating F-35." I don't know how valuable is this rhetoric, but it is. It is what it is. Moving on. Uh, a lot of political chit chat which we don't like to discuss at all, right? We don't like it. No. Okay, so a lot of action happening as far as the whole play is considered. The business play, right? Uh, India may lend cautious support to China's global AI body proposal, right? So China, what it's trying to do is trying to be or position itself as the voice of reason as far as the whole AI regulation is considered. So right now, every country is full ballistic on AI, because AI is like paramount. It's very very important for national security reasons. Everything is AI, right? Everything is AI right now, uh, and there's practically not much regulation. It's getting a free rein. There's a lot of copyright issues that are happening, but people are like, nothing should stop the progress in AI, because if we don't do it, the other country does, right? And now what's happening is that regulatory gap, as far as the whole AI play is considered, is being filled by China, which is positioning itself as, it's trying to make a global AI body, which sort of determines what can be done and what cannot be done, what should be done, what should not be done. Obviously, US doesn't really is not looking for something like that, but China wants India's support as far as that, as legitimization of that AI body is considered. So uh, that's what's going on. Global AI governance will be on agenda during PM's visit to China in the SEO summit. Move to bring China and India closer on tech frontier. Wide issues. Moving on. TCS has formed a new AI unit, which shouldn't be surprising to anybody. Uh, TCS is really recalibrating itself. Every tech company, every IT services company is trying to recalibrate itself to the whole AI paradigm. The new unit to integrate all existing AI data teams. So they are basically starting. What these companies are trying to do is essentially lead to offer faster adoption of AI as a service, right? Whichever company they used to be dealing with, they want to create projects for them where AI adoption can be streamlined and, let's say, sped up. So that's what's happening as far as that play is considered. Deepening AI domain solutions, building new partnership ecosystems, and so on and so forth. So new chips fall in place for India's semicon mission. We've talked a lot about this. Total proposed investment in the new semiconductor play is $2.7 billion. Macron's commitment is $8.25 billion. There's a lot of, so there's Tata facility in Dholera, then they're going to start something in Assam, right? Power check plan, and so on and so forth. Dholera, Assam, yeah. So there's something called Tata Electronics Private Limited Power Chip Semiconductor Plan, PSMC. It's in Dholera, 50,000 wafers. Then there's a semiconductor assembly and testing, that's TSAT. That's in Assam. That's a 27,000 crore plan. The first one is almost a 1 lakh crore plan. Then there's, in Sanand, then ATMP unit, that is assembly, packaging, and so on and so forth. I forget ATNP's full form, but yeah, it's basically an assembly and so on plant, which is also in Sanand. It's a 7,600 crore plan. So a lot of investments are happening in in semiconductor manufacturing by India. But I fear, and a lot of people fear, that it might just be too late for India to catch up. But the good news is that it's never too late. It's never too late to start such things, because uh, there's always a road ahead. The cascading effects save everything. So you might just invest something in a technology, and you figure out that, that investment didn't really go as planned. But the things that investment leads to, they make everything worth it, right? So a lot of people get trained, and then they begin building something else, which leads to a lot of good outcomes. Moving on. uh, Zomato has gotten a 440 crore GST demand, which is why a bit of its stock got the stock got a bit of a rumbling, but that's hardly an issue. I don't understand why the government is not so proactive as far as this whole place considered. Why is everything so retrospective? So this particular GST demand has come for GST on 2017 to 20. Now, why are you sending that notice 5 years later, right? So Zomato is saying that we have all grounds. We are talking to our lawyers, and lawyers say that we don't have to pay it, so we'll fight it out. And while they fight it out, while the 40 crore tax thing, they fight with the government, and the government fights with Zomato. Who's gonna uh, make money? Do you know who's gonna make money while that happens? We know who's gonna make money, right? Mr. Raju Kumar says ATMP means assembly, testing, marking, and packaging. You were right. Assembly, testing, marking, and packaging. Just one second. I have to put my computer on charging. One second. Till then, by the time Zomato actually fights this case, and the government tries to squeeze them, who's gonna make money? We know who's gonna make money, right? Just one second, folks. Lawyers are gonna make money. Lawyers, as always, are gonna make money. And we are free. Lawyers don't know why people taking other fields as careers, says Mr. Patil. Mr. Raju Kumar says lawyers. Yeah, legal game is not easy at all. It's very much like entrepreneurship, especially if you're litigation. So it's not easy at all, and it's a joke. But yes, really, what lawyers make money essentially, who makes money? Lawyers, is a cry for the country, right? Now, this is something that Mr. Musk said recently about US. So what did he say? Was that America, if you look at China, if you look at Chinese government, the CCP, the people in the Chinese government, the people doing the heavy lifting, they're engineers. They're actually people who are making stuff, right? But if you look at what US is doing, the lawmakers that we have, the politicians that we have, they're more towards the legal background, right? So we are going away from a builder country or a builder economy to a litigating economy. And when that happens, everything gets screwed, right? Everything gets screwed, right? Because just imagine, there is a builder, right? You have builders at the helm, okay? So these people build, right? These people make things. When you get lawyers at the helm, what do you get? You get just conflicts, litigation after litigation, stoppages of things and so on. So when we say who makes money, lawyers make money, it's essentially a very bad, it's a joke, but it's a cry for help for the country, right? Because if you have like so many legal cases halting progress in all sorts of ways, right? There's no streamlining. That's basically stuck, man. That's screwed. So you don't need to do that. Mr. Patil says that's a great point. Don't want nation's best mind utilizing time and energy in fights rather than building the country. Yeah. So that's what Mr. Musk said, right? That we are going away from being a builder country to being a litigating country, right? As far as everybody is considered. And that's never a good sign. Now, I come from a family with 4 generations in law, but I wouldn't want my country to be litigating all the time, right? That's why I'd say, decriminalize things, deregulate, and so on and so forth. Moving on. GDP growth may take 30 to 80 BPS hit. BPS is 0.01%. So 80 BPS means 0.8% in GDP. So that's what's happening. Textile companies, gem and jewelry companies, and so on and so forth, they are asking for help, rerouting shipments, job loss fears, and so on. We've discussed a lot about this. Auto parts companies are offshore manufacturing units. That's what I was talking about. That these companies are rethinking their investments in India as far as the whole auto parts play is considered. Auto parts exports are about $3.6 billion or something, right? India sends like $2.5 billion of worth of auto parts, auto components to US itself. So that is a bit of a problem, and that's you know Mull reviving manufacturing in US, setting up new units in Mexico, also on lookout for new export markets. 5% duty effective impacts $3.5 billion worth of exports, cars and small truck parts. 50% duty to apply on $3 billion worth of exports. Total Indian auto parts exports to US were $6.6 billion. $6.6 billion. So that $6.6 billion is gonna get hit, and if these people start looking at other places to set up their plants, India will be in a very, very sad situation, because India really, really needed and still needs those investments, right? We need the money. We really need new manufacturing to happen, because we've been sleeping on the wheel for 40 years, and that is a very, very bad deal. Moving on, the seafood industry, of course. Moving on. At 49,711 rupees a year, Chandigarh most expensive for schooling. Is anybody surprised that Chandigarh is most expensive for schooling? Can anybody guess why Chandigarh is most expensive for schooling? Can you guess? Can you guess? It's we've discussed about this. We've discussed about Chandigarh and what makes it special, and so on and so forth, right? Why do you think Chandigarh is essentially very expensive for schooling, right? Even more so than Delhi and so on and so forth. NRI money, says Mr. Tiwari. It's because Chandigarh has a really high GDP per capita. After Goa, Chandigarh has the highest GDP per capita, and Goa is a large place as compared to Chandigarh, which is a very small city. So effectively, at a if you read between the lines, Chandigarh is effectively the richest part of the country, right? Very, very expensive, like very rich people, all sorts of rich people, and with that, obviously, the private schools become more and more elite, and when they become more and more elite, Chandigarh becomes the most expensive place for schooling. So no surprise there. Is that 49,000 per month? Oh no, it's per year, per year. So you're talking about government and an average of all the things. So 49,000 per year sounds, uh, uh, you know, per year sounds a little, let's say, reasonable, but it's not. When you're talking about average, it takes up the entire play, right? So some data here. Rural is government is 2,000 rupees, urban is 4,000 rupees, India is 2,800 rupees, and then it goes up. That's nothing. That's nothing, says Mr. Patil. Moving on. There's an article by Mr. R.C. Bhargav. R.C. Bhargav is R.C. Bhargav sir is like a legend, right? It's you didn't have to delete that, Mr. Patil. That's okay. But anyway, so what we are saying is that lithium import, R.C. Bhargav sir has an interview, and whenever he talks, R.C. Bhargav sir, he just spins gold, right? He spins gold, and he's such a data driven guy, and I respect him so much. He's like 91 years old, right? And even at that age, the data he has with him at all times, at his fingers, at the tip of his tongue, it's just extraordinary. Whatever he says, whenever he's talking about the economy, whenever he's talking about his industry, by the way, if you do not know, R.C. Bhargav sir is the chairman of Maruti Suzuki in India, has been, one of the architects of the Indian automotive industry. He's just next level. It's just extraordinary. And today he speaks. He says, and I quote, "If you import batteries, it's costly. If I'm packaging them, I get a 15% advantage in customs." So he says that the lithium import may weigh on EV battery making because you're essentially just dependent on one supplier's whims and fancies. It's a big risk. I consider it a big risk, right? You cannot be dependent on just one supplier or one country for all the supplies and then expect it to work okay, which is such a smart thing to say, which is not that revelatory, like we know about it. But what he says as the solution makes more sense. So what he says is that if you cannot get the supplies sorted, if you cannot get the components sorted or the minerals sorted, look for alternate battery chemistry, right? Look for alternate battery chemistry. Now that's something that only an insider can say, right? Because you don't need, there can be replacements of lithium ion, right? So my friends are working on a technology which uses zinc gel batteries. Now, zinc gel batteries is an alternate technology. Now, it doesn't use, it's much greener, it's cheaper, it's not as dependent on China as lithium ion is, because lithium ion, basically everything is held by China, right? So, alternate chemistry. So, I'm just gonna throw a bit of numbers when he says, what I hear now is that the rare earth magnet might just get solved, the problem. But it was a warning signal. If I was an investor, I would very much have in mind the risk element of setting up a battery plant and depending on imported lithium, and that import largely coming from one supplier. It is a very big risk. So he says that if I was an investor, I wouldn't make batteries in India, right? And then he says the dependence on import is possibly one of the factors which is deterring people from making investment in that battery manufacturing. But how do I protect myself against some arbitrary decision by the supplier? He's right. He says India is not producing too many EVs, and there is a problem of making large volume EVs because of the batteries. That's a reality for everybody. If you import the batteries, it's costly. If I'm packaging the batteries, I'm getting a 15% saving in customs. We're not even packaging batteries here. He says if you at least package the batteries, you wouldn't have to pay like 15% customs, right? We're not even packaging the batteries here. So personally, I would be hesitant to make a large commitment of the domestic market because that would mean importing a large number of batteries, which is going to be very costly. So whenever he writes anything, right, it's not growing any. He says EVs are not really growing anywhere. EVs are growing in India right now. From 2.2%, we've grown to 4.5%. He didn't say those numbers, but that's the fact. But it's not growing anywhere. EVs are plateauing, right, across the board. But if we are to insist on EVs, we might like to look at other means so that we can make batteries. It's not growing anywhere. So India can't be an exception to what's happening in Europe and America. Actually, sir, that's where I differ with him. They're not growing because they're plateauing. They've reached a saturation point. India is not growing because India doesn't have any share, right? 2.2, 4.4%. China is like for 50%, about 50%. It's half of all vehicles as being sold are EVs. So that's why a huge number of petrol, diesel cars. Someone who's dealing with environmental issues has to look at these petrol. You can't cut back on total production because that other consequences. You have to find cleaner technologies. Self-sufficiency relying on imported raw materials. You can't grow your mobility industry based on that kind of import dependence. He's right. He's absolutely right. He's talking about alternate, uh, you know, uh, opportunities, alternate, let's say, chemistry like zinc gel and other things. But do you think it's gonna happen? Do you think Mr. Bhargav has, let's say, a holistic perspective? Or is he talking because Maruti is over indexed on petrol and very under indexed on EV? Is he saying this because Maruti is basically a laggard in the EV play? Or is he reading the EV market right? Right? That's two possibilities. That he's clearly not bullish on EVs as much as the world is, right? Is he right in reading of the market? Or is he talking out of a bias because he's leading Maruti, which is essentially a laggard in the EV play? That is the question. That is, how big is this question, by the way? It is 5% of the total economy, right? Yeah. So it's a $250 billion question. Uh, just sizing the question up. Moving on. Uh, Drug medical tech companies fear GST changes may squeeze funds. So, viewers of Thinkers Frequency would remember we talked about these companies resisting GST. So, if you remember yesterday or day before, or maybe a couple of days ago, I don't remember, we discussed how insurance companies were talking about GST rationalization being a problem for them. Do you remember that? We discussed that. I hope you do, because we discussed that in pretty serious depth. The whole input tax credit thing, the inverted duties, right? So insurance companies were saying that, sir, if you say that individual insurance will be priced at 5% GST instead of 12% GST, we are going to lose money because our input credits won't get balanced, right? That's what these people are saying, that we are buying a lot of things and we have to pay GST on that. If we can't collect GST here, it's gonna be a problem because our GST won't get balanced, right? That is called inverted duties. That's the play, right? When the duty on one side is high and the duty on the other side is low, so the consumers are supposed to benefit, but your money gets low, right? That was insurance industry. Drug and medical tech companies are also fearing that. So they've also come and said, sir, please don't do that. Because if you say 5% rate on consumables, the duty structure will go inverted and we'll make things, it'll be difficult for us. And also, it'll attract a lot of imports because this particular consumption play will get attractive to people outside. So, increased cost for local companies make imports cheaper. That's what these people are saying. That's why reform is so hard, right? Everybody comes up with saying something which leads to complications, right? Complications. Moving on, speaking of complications, multiplexes have also brought their case to the government. They say that right now, the lowest GST applies on tickets below 100. Please make it 300. Because 100 was decided way back. Inflation has happened, ticket prices have risen, and so on and so forth. And if you don't do that, it's gonna be a bit of a hassle, right? So make it 5% under 300 rupee ticket price. That's probably gonna save us money. So do you think the government will do that? Well, it can, because it doesn't have much to lose. Cinema is what, a $3.4 billion industry? What is $3.4 billion industry? How much of GST must the $3.4 billion industry making anyway, right? It's nothing. Less than $1 billion, right? So the government can do it, but will the government do it? Because it's such a small thing. It's basically a very small line item in the whole list of things. The government might just forget about it, which by the way happens a lot, right? Beverage companies seek sugar-based levy in line with global models. Currently, all aerated drinks include sugar, non-sugar, low sugar are taxed at 40%, and no sugar, low sugar drinks sales doubled. And the government, these companies are saying that these should be the duties should be in line with the global norms. So there's a comment which says, Mr. Patil says, the companies don't want to reduce GST. I'm a little confused, sorry. Yes, Mr. Patil, the companies don't want the GST rate to come down because, and this YouTube live doesn't allow me to go back seeking. No, it can. You can go back. You can actually just take that and go the scroller and go back. So I'll just say it again for you if it's a confusion for everybody. If it's a confusion for you, I'm sure it's a confusion for everybody. When you reduce GST, okay, let's say I'm selling a toffee, okay. Now the toffee is taxed at 20%, okay. It's a 100 rupee toffee taxed at 20%. So earlier, the consumers had to pay a GST of 20 rupees. I get 20 rupees from the consumers as GST collection. Now in making of that toffee, I had to buy a wrapper, I had to buy sugar, I had to buy whatever goes in making of those toffees, right? And that also I had to pay a GST of, let's say, I bought stuff for 50 bucks to make that 100 rupee toffee, and on that 50 bucks I also paid 20 rupee GST. Okay, so how much is 20 rupees of 20% of 50 rupees? It's 10 bucks. Okay, so I paid 10 bucks of GST to these guys. Okay, and then got 20 bucks of GST from these people. Now the government says no GST on these people. So I paid 10 bucks of GST to these rapper guys, the sugar guys, and everybody, but I didn't get any GST here. So my GST doesn't get balanced. My GST got locked there. If I had gotten 20%, 20 rupees GST here, I would have been very happy, right? Because I had paid 10 rupees in GST, I got 20 rupees in GST. So then the net level, I'll only have to pay 10 rupees GST to the government, right? But the working capital becomes good and so on and so forth. So I get a lot of money. You understand now? I hope you do. Moving. That's called inverted duty structure. That the duties get inverted, right? Very interesting stuff. Very interesting. No, we can't go back during the live. At least your channel on mobile, says Mr. Tiwari. When we export items, there is 0 GST, but I pay my suppliers 18 GST like steel. This case also inverted GST. We get refund for unused ITC, income tax, by the way. Yeah, you're right, Mr. Patil. You're right. When we export item, there's 0 GST, but I pay my suppliers 18% GST. This case is also inverted GST. Correct. Correct. Moving on. Full land digitization to spur FDI in reality. So they're saying that right now India has 372 million or 99% 0.8% of available land records which are available. They've been computerized, they're not on paper. It's gonna go 100%. So available land records, that is itself a caveat. Available land records, 99.8% of it is digitized, computerized. When it goes to 100%, you're gonna see some FDI spurring. Mr. Sam Tab writes a comment. Hi Nishant, just to let you know, the seeking doesn't work here. Have noticed that if I join late, I am unable to start from beginning. Just hoping this you can change from the back end. I'm sorry about this. I did not know. When I'm listening to Scott Adams sir on live, I actually take it back and there's a live button there. I put it off, take it back, and then I'm able to watch. So sorry about that. Maybe it's something that you need to explore, but I don't think there's something on the back end there. It's not in my hands. Moving on. Revenue per hotel room is up 12.9% in Q2. So people are being able to make more money, which is... Now let's come to the Mr. Patil's comment on yesterday's live. So he wrote that it makes sense to invest in India's premium hotel chains, because even if people are going outside, as far as travel is considered, tourism is considered, and they're visiting places outside, their expectations will be set. So they would likely, whenever they are traveling in situ in the country, they are not gonna go for unbranded play. So essentially, Mr. Patil's case is that just like liquor, these people are looking at premiumization of hotels, which makes sense, right? Which totally makes sense. By the way, what's making sense is Apple ties up with Jio to enable RCS. RCS is a technology. RCS is a messaging standard developed by global telecom industry body in 2007 to upgrade SMS by including the rich red receipts and so on and so forth. So just like WhatsApp, where you can see that the person has read your message, the RCM SMS essentially has the same technology. So Apple has tied up with Jio to enable RCS. Airtel says that we do not need RCS because RCS is going to lead to a lot of spam. So two different visions for the industry. I'm likely to believe that SMS as an industry needs to be encouraged, just so you can be less dependent on OTT, right? So I like RCS. Let's see what happens. Moving on. Indian REITs look to grow long tail after office outing. REITs is real estate investment trusts. They are going heavy. Yeah. Moving on. By the way, there's a serious problem happening with the insurance companies and the hospitals. So hospitals were dealing with some problems as far as insurance claim processing is considered. Some claims were getting rejected, some payments were not getting cleared soon, and so on and so forth. So cashless. So what the hospitals are saying is that you pay money right now, the users. You will get from the insurer whenever you want to get with the from the insurer. We don't want to deal with the insurance, so screw you, right? So insurance company says it's gonna hurt the families, which of course it will. It will hurt the families a lot because cash negative exercise it will become for the users, and that's gonna be a very very big trouble, right? It's gonna be a big problem. So this case is going on. May add to patient trauma. Healthcare body stops cashless hospitalization. Insurance council terms it disruptive. It is disruptive. Now this particular play is going to affect a lot of hospitals, a lot of users, and then the government will step in, and then there's some lawsuits that are going to happen from both sides. But eventually, I think we should come back to the whole, hospitals dealing with the insurers, because otherwise the people will get screwed, right? But that's what's happening. Media reports that 20,000 hospitals in its network AHPI across the country has directed all member hospitals across North India to suspend cashless treatment facilities for Bajaj, Allianz and General Insurance effective September 1. So this needs to be solved ASAP, otherwise it's gonna be mayhem, right? I hope nobody needs the hospitals. Moving on. Companies withdraw bond sales as cost rise. I get it. We've discussed the bond market, right? The government sovereign bonds. Yes, we have. Gangwals sell 3.1% in Indigo. Gangwals were the co-founders of Indigo. Rakesh Gangwal, sir. He's been offloading his stake. He's been going away. And it's proving to be a very, very good deal for him. Very good deal. Very good deal. Moving on. We need to quickly end it. But there's some material which needs to get covered. Sorry for the delay. Let me quickly go forward. Europe's IPO market poised to bounce back. Credit card game back in full swing as players take the risk. So July data has come, RBI data. It says that they added like a 2 lakh credit cards, and the banks are willing to take the risk, even though the microfinance and everything became a bit of a problem, and unsecured lending and so on and so forth. Credit cards had some sort of delinquencies. That might just be subsiding. Now we didn't need to read this report, but because we already talked about all of this, the banking sector will overall see some improvement in times to come. In a quarter now, we've been talking about since 90 days. We said that's gonna fall, it fell. We said it's gonna pick up, it's picked up. So it's gonna pick up. It's a news in that direction. What's the time right now? I just kid. It's the time to look into the future, right? By the way, another case of lawyers make money. Welspun moves NCLT against Lavasa's top bidder, Valor. Now, we've talked about this Welspun case and Lavasa's NCLT proceeding. Just giving you a primer. Welspun bid for Lavasa. It bid got cleared. But in response to it bid, after the bidding got over, somebody else came in and gave a better bid. Now, the committee of creditors essentially accepted that bid, considered it. Right? Welspun said that this is illegal. These people came later. They got our bid and then they bid. That's not how it should work, right? The committee of creditors wanted more money, so they said, really, so that became a dilly-dally kind of a thing. Now Welspun says that the Lavasa's top bidder, the Valor, which you just approved or which you're just considering, he's stuck in an LCIT court. They've quoted a legal term which says that nobody who's actually bidding for these NCLT proceedings can be involved in some proceedings themselves. And Valor, the company, has been involved in its subsidiary has been involved in an NCLT proceeding. So while all of this is going on, who makes the money, right? Who makes the money. That's what we are talking about. Moving on. Banks told to fix PM Kisan glitches. As we all know, Jan Dhan Yojana is the greatest scheme to have been unveiled in the country. It's done the most that any scheme could have done. Jan Dhan, opening people's bank accounts, bringing them as a part of the whole play. Earlier, what used to happen was if you wanted to have a direct benefit scheme, direct benefit transfer to a poor guy, you actually handed him cash, right? And you know what happened to the cash, right? He didn't get it, basically. The people who were supposed to give cash, they just ate it, right? And they took their thumb impression and so on and so forth. But then direct benefit transfers happened, and then they started paying these people, the Garib Kisans and everybody, basically, right? But the problem is that there's been a glitch because, as you know, these a lot of these poor people's bank accounts are being used by other people, and there's an Aadhaar mismatch which leads to a lot of drain of resources. Like it's a direct cash drain which happens. Like I told you, a lot of real money betting players, like the illegal ones, what do they do? What did they used to do? Or what did they do? They actually got poor people's accounts from villages and all sorts of places and used them to operate their betting play, right? That's what they used to do. Now, what happens when that particular play is registered with some sort of government scheme, right? That money also comes. So it's a lot of confusion, and the government has disbursed over 3.9 lakh crore through 20 installments since the inception of the scheme. Now, in the PM Kisan scheme, the Kisans were supposed to get, the farmers were supposed to get like 6,000 bucks in two installments or something of that, three installments, or 6,000 bucks like every quarter or something. Let me take the exact look at that. 6,000 per year in three installments. Okay, so 2,000 rupees per 4 months. These people were getting. Now that essentially, without the Aadhaar getting linked and everything, it causing a bit of a problem, which is being fixed in year 6,000. You're right, Mr. Kumar. States for tough steps to prevent profiteering from GST. We talked about this. Andhra Pradesh may clear 12.7 crore green projects this week. Andhra Pradesh is really going all guns blazing, firing all cylinders. 12.7 thousand crores worth green projects this week might just get cleared in Andhra Pradesh. Some bros got money for Ladli Behan Yojanas recently, says Mr. Tiwari. Some bros got money. Yeah, bros get money for Ladli Behan. That's India, man. That's India, right? So Andhra Pradesh really going blazing. By the way, our energy minister says that India poised to lead in wind energy, and not just domestic energy, also exports. Now I'm all for exporting wind turbines and stuff, right? But India should not embrace wind energy. That bit is very, very clear to me. You know why? Because wind is bad. Wind is shitty. Wind isn't that profitable of a venture. And then it also kills all the birds, and the real estate around wind just goes to the toilet, right? So you don't want to have so much of ecological harm. And also making of the wind turbine also takes a lot of Chinese parts, right? So you are essentially, it's just a no-win game. Government should come out with its own policy saying that we're just banishing wind. That's what US has done, by the way. Trump is very against wind. He says wind is nothing, it's bullshit. So no wind, right? Which people took as another joke. But anyway, Trump has said something which is clearly faking some leverage. Okay, so what did he say? He said, if I played my cards right, I would destroy China, but I won't. And what were his cards? People ask him, what cards are you talking about? He said that China halted rare earth and so on and so forth. It was problematic. Beijing approved. Trump praised China for intelligently identifying rare earth. Now, he says that we would have, China had 200 jets that were unable to fly because the US wasn't giving it Boeing parts due to Beijing's policies on magnets. So Trump says that Beijing allowed rare earth magnets to America because America stopped Boeing's parts for Chinese jet engines, the planes, the passenger aircrafts. Now, is this a good strategy to deal with China? Because you know who makes stuff fastest in the world, right? China. Soon they won't need your parts. And while you'd like to believe that you won't need their rare earth magnets either, or rare earths either, you really do. You really do. So this play of leverage, he says that they gave us rare earth magnets. Do you know why they gave us rare earth magnets? Because I stopped Boeing parts for their planes. So if I played my cards, I would destroy China, but I won't. Says Donald Trump. I don't think it makes any sense. China has all the leverage, but the good news is for America that they are really cutting on that leverage fast. So what their plan is that you have like 200% tariffs on pharma. So you make them come to US anyhow, somehow, right? 200% tariffs. You say that if you don't shift to US, you're gonna get screwed, right? So you come to US. They're saying 50% tariffs on steel, right? So you gotta make steel somehow, anyhow. We don't need it, right? So your steel requirement goes away. You're saying EV, rare earth magnets, we're gonna start doing our own mining and so on and so forth, right? We do. So what Trump wants is by 2028, he can deliver some real progress on the Make America Great Again slogan. That is like, hey, we were totally dependent on China for APIs. We were totally dependent on China for our medical supplies, our medicines. Not anymore. We were totally dependent on minerals and so on and so forth. Not anymore. You know, we are making money. Our fiscal deficit was growing, but the tariff situation made us make money. This is what has happened. So a lot of things. His goal is to essentially deliver on a lot of promises till 2028. So let's see what happens. Right, moving on. Digital tax on US tech companies, and he's also batting for his tech companies, the Facebook, Googles, and all. Now, if you know, viewers of Thinkers Frequency would remember that Facebook and Google have been getting a lot of litigation, a lot of digital tax, a lot of anti-competitive notices, and so on and so forth from India, from Europe, from everywhere. Right? He says that if you're gonna do that, I'm gonna tariff you to hell. So he's basically saving his digital companies. He says you can't fight our incredible company. You need a complete pass. And China is getting a complete pass. Chinese tech players are getting a complete pass. You're just hurting us. So take your aggression on China, and that's when you're gonna get it easy from me. Lastly, Mr. Woody Allen, sir, a personal hero of mine, is in news. So he gave a talk to a packed auditorium, a theater play in Russia, and people started abusing him, saying that you should not be doing that. And he said something very nice. I'm very against the war. I'm very against Putin. I think Putin is totally in the wrong in this one, and you should not have a war. But stopping artistic exchange or stopping just conversations, I'm not even performing there, is not the way to go. So, they banned him, right? And how he could do it was he was basically cancelled, right? Hollywood has banished him. He's basically an outcast, and he's like, I can talk, right? Wherever I can talk. Anyway, great session. 28 minutes of average view duration. So whoever tuned in, just watched. It's lovely. I had a lovely time talking. Mr. Tiwari, Mr. Patil, Mr. Kumar, Mr. Sam Tab. I'm sorry, I can't pronounce your name right. Thank you so much for interacting. I hope you had fun. I hope it added a lot of value to you. It definitely added a lot of value to me and everybody else who joined. This brings us to the end of the 94th episode of Thinkers Frequency. Daily mental workout, daily dose of insights and analysis which don't lead to paralysis. Right before we punch in, it's 9:16. We are very late. I wish you a beautiful day personally and professionally. I'll see you tomorrow, same place, same time, hopefully. Bye bye. Take care. Have a beautiful day.